Hi everyone. Before you place an order for a new product or your first product, you absolutely have to do an estimate of the costs and profit over the next 12 months. And so what we've built is a tool called the ROI analysis tool within the selection section of CashCowPro. Now I'm going to show you how this works and how you can use it to determine if a product's good before you even start doing it. Okay, so for this example, we're going to say units sold per month. We're estimating we're selling 1,000 units a month at a price of $20 each on Amazon. And the unit landed cost is how much we think the product costs plus the freight cost. So we're going to estimate $5. Boom. What the tool does is instantly, and I'll explain every line here in a moment, calculate the cash flow, the inventory, the sales over the next 12 months for your item, but two, also gives you a quick indication of how much profit and return on investment you're going to make in the short and long term too. Okay, so starting with, we've put in the units sold per month for 1,000, selling at $20 each, and it costs us $5. Our initial investment is showing us $10,000. So what it is if you're selling 1,000 units a month, you really need to buy about 2 months of stock. So that's around 2,000 units at $5 each, including the factory costs and the freight, gives us an initial investment of $10,000. So it's just a quick indication of, for this product at this rate of sales, how much money you need approximately to get it going. The inventory arrival date is based on today's date when you're doing this analysis, plus the lead time of the product, and it gives you an indication of when you can start selling on Amazon. So you can change under the show advanced options, you can change the lead time of the product. For example, I can put in 30 days here, and now the total lead time is 45 days, or you can change it to whatever you want. And here you have production, freight, and Amazon handling, and I'll explain that in a moment when we go over the advanced options. But so here, today's date plus 30 days gives us an inventory arrival date of 25th of May into Amazon. The break-even date is basically, when do I get my 10,000 back? You start selling on the 25th of May, you're selling around 1,000 a month, you've got $20 from Amazon, but then you're taking away the FBA cost, you're taking away the landed cost, you're making a certain amount of profit per month, and you can see that in the advanced options. So you're making $9.44 per unit. So how long is it going to take before you get your initial $10,000 back based on the expected sales if the products arrive on the 25th of May? And what we have calculated is it will take till the 11th of July to get your initial cash back. Again, this is just an estimate, but it's very useful because, for example, if my sales price was 10, it's going to take over a year for me to get my money back. If my sales price was 12, it's going to take from May, well, today is April, from April till September to get my initial $10,000 back. It's a great indicator as to whether the product you're considering is actually a good market or not. So it is estimates, but it does give you enough of an indication as to whether you continue with the product or not. So I strongly recommend before any product you do, you put in how much you expect to sell per month, the sales price and the unit landing cost, and you go through this process and you analyze it. Okay, monthly cash flow. So if we're selling 1,000 units a month at $20, we're getting $20,000 in sales a month. If we take out the FBA fees, which are shown, the pay-per-click fees, which you can add in the advanced options, and the landed cost, which is the freight cost and the production cost of the 1,000 units a month, we're left with $9,440 a month in profit. That doesn't include any other fees and costs like membership, like software costs that you have, or any other related business expenses you have for Amazon. This is just purely based on this product, taking away the FBA fees, taking away the pay-per-click fees, taking away the product and the freight cost, how much you should expect to make per month. So $9,440 is fantastic. And so using that, we can calculate we're selling 1,000 units, which costs us $5,000, and we're getting $9,440 back every month in profit, having put in $5,000 into the product. So we're getting 189% return on top of the $5,000 that we put in. So not only do we get the $5,000 that we put in for the product back, we get an additional 9,440 or 189% in profit. So that's the monthly return on investment, and the 12-month return on investment is simply this number times 12. And this is just giving you an indication of how profitable the item is. If this is too low, for example, if you're only going to make 50% over 12 months, it's going to take you 2 years before, one, you get your original money back, and two, have enough money to do a second product that's the same. The higher the return on investment, the sooner you can do your second item, your third item, your fourth item, because your first item is generating enough cash to spin off additional products for you. Okay, next is the advanced options. So here we have a sales price, which you set here of 20. You can change the weight. We instantly assume it's £1, but you can change this to whatever it needs to be. The FBA fees, you can set the Amazon size, and you can look this up. If you go to the product that you're considering, a niche you're considering on Amazon, you can then look at the top 5 products in that niche and see whether they're considered oversized or standard. I would recommend you go with standard products. The gross profit is simply the sales price, take away the FBA fees. So you got for every sale you make, $14.44 comes back to you, or 72%. You take away the product cost of how much the item cost you, including freight, 5, leaving you with $9.44 or 47.20% margin. That's great. That's a good item. And so this just gives you a quick overview, and you can change the weight and the size so that, and these numbers below will reflect that as well. You can save this analysis, and in this case we're going to call it jump rope, to your My Potential Products. Boom, done. Okay, the units sold per month, 1,000 per month or 33 per day. So you can adjust that here, and again this will reflect below. You can also change the lead time of the product. So production could be 45 days, for example, giving you a total lead time of 60 days. And notice that it will now take 2 whole months before you can start selling in Amazon, and your break-even date is pushed back. That's why lead time is very important. If you go with light, small, simple items, your lead time's faster. Sooner you'll get your products into Amazon sooner, and you can start selling sooner, and you'll break even and get your cash back sooner. And your freight costs less. Your production time should be less. Your freight, you should be able to send by air instead of sea. If it's by sea, it could be another 45 days. So you're taking a total of 3 months before you can even start selling. So this tool allows you to play with all of these configurations just to see, based on the item you're considering, when you're going to get your money back and how it's going to perform before you've even purchased it. Okay, so we now know what these numbers mean, and they're a quick indication of when we're going to get our money back and how profitable the item is. Here below, we'll go into the detail of what happens over the next 12 months. So we started today. The lead time's 30 days. So we start selling on Amazon 30 days later, so the 25th of May. Then from that day onwards, we'll be selling 1,000 a month. So on the 25th of May itself, we have yet to sell any units. 30 days later, on the 25th of June, we've sold 1,000 units because we're selling 1,000 per month. So what this shows is literally how many units are selling per month, and it takes into account your lead time. Sales is simply the number of units sold times the sales price to give you the sales revenue per month. So 1,000 times 20 gives you 20,000. We're taking away the FBA fees for those sales, leaving us with how much money actually goes in our bank from Amazon. So in June, for example, we've sold 1,000 units. We've got 20,000 in revenue. Take away $5,560 from Amazon, leaves us with $14,440 that they pay us. Okay, next section, inventory and order quantity. So because you're selling 1,000 units per month, the first order is going to be approximately 2 times that, so 2 months stock. So automatically we calculate 2,000 units, and because your lead time's 30 days, these 2,000 units arrive into your inventory 30 days later, 25th of May 2016. So this section literally shows you when you need to order, how much you need to order, and how much you've got in inventory. So first order 2,000, boom, it goes in. Then you're selling 1,000 per month. And you're auto reordering 1,000 every month to replace the 1,000 you've sold. Because your lead time is 30 days, it arrives back in, then you sell the 1,000, so your stock remains steady at 1,000 units. And you can play with these numbers and lower it, but this is just to give you an indication of the cash flow, the inventory flow of your product. What this section shows in the order cost is how much that order quantity is going to cost you. So you can see the effect on your cash flow. Your first order is going to be 2,000 units at $5 each, so 10,000. Then you sell 1,000 units per month, which you need to replenish. It's going to cost you $5,000 every month. So this comes out of the $14,440 Amazon pays you for selling those 1,000 units, which leaves you with the cash flow. So every month you're making $9,440 dollars. And in cash position, you can see that you're starting off by spending $10,000. Month 1, you've sold nothing because the product's just arrived in Amazon. Month 2, you've made $9,440, so your overall cash position is still minus $560. And as you make $9,440 each month, you can see that, boom, from your initial $10,000 investment, after 12 months, you've got $84,000 in the bank. That means you could do 8 more products the same as this initial one, which is fantastic. In the advanced options, you can add in the pay-per-click cost, monthly pay-per-click spend. So here we're going to put in, okay, I plan to spend $10 a day or $300 a month in total. And what it will do is it will take out the pay-per-click costs from your monthly cash flow, and you can see how that affects the overall product. So basically what this does is gives you a snapshot of how your product's going to do over the next 12 months. And if after 12 months your cash position is $5,000, is it really worth spending 12 months doing that product? If all you're going to end up with is your initial 10,000 back plus 5,000 in the future, no, it's not. So what this tool does is lets you experience and simulate actually having had the product in Amazon for 12 months. What's going to be the net result of that based on the average of the niche? How's it going to perform? And you know whether it's even worth considering this product or not, just using the ROI analysis. It's an extremely powerful tool, and you can then save, as I said, that to your My Potential products, but you can also take products from the niche selector. You can save them to My Potential products, and from there you can also just hit this arrow and it will automatically populate the ROI analysis for that product. So any product you find in the niche selector, you can do a quick ROI analysis on as well, very easily and quickly, to see how it's going to perform too. Boom, done.